And welcome back. Corelogic just announced their latest housing market predictions through November of 2023. And in today's video, I'm going to share exactly what they're predicting for 2023. On top of that, they also identified the top 5 markets at greatest risk of home prices decreasing over the next 12 months. They also identified the cities within the US in which home prices have increased the most over the past 12 months here. So I have a lot to share in today's video. Let's go ahead and dive right in. And of course, if you guys get any value out of this video whatsoever, then please hit the like button. I really appreciate that. And of course, I appreciate you. And Happy New Year. So this is a report from Corelogic that was just announced on the 3rd of January here. And this is their Home Price Insights report, which is analysis through November 2022 and provides a forecast through November 2023. And this report in today's video is based on home prices, which is based on their Home Price Index or the Corelogic HPI. This report is published on a monthly basis. They look at home price changes on a national level, the statewide level, as well as the city level as well. So home prices nationwide, based on their HPI, increased year over year by 8.6% in November 2022 compared to November 2021. Also, home prices declined by 0.2% in November compared to the previous month. So before I share their latest housing market predictions through November 2023 and also the predictions for next month, December, I also want to provide their previous housing market forecasts. So back in April, they were calling for home prices, again, based on their HPI, to increase by 5.6%. That's April 2022 through April 2023. This is their first year-over-year downgrade that was set in 2022, the first downgrade of 2022, which coincidentally, average mortgage rates have surpassed 5% in the beginning of April of 2022. So it's part of the reason why they had the first downgrade of the year. Also back in May, or at least May 2022 through May 2023, they called for home prices to increase by 5%. And at that time, that was the second consecutive downward revision in their 12-month housing market forecast. Then in June, through June 2023, their forecast was a 4.3% increase in their HPI or home prices. Then in July, they called for a 3.8% increase over the next 12 months. And then back in August through August 2023, they called for a 3.2% increase in home prices. And at that time, that was the 5th consecutive downward revision in their 12-month housing market forecast. Then in September, and this is when I made a video and I actually was really scratching my head why they actually upgraded their revision here, because from September 2022 through September 2023, at that time, their forecast was for home prices to increase by 3.9%. And at that time, that was their first upward revision in their 12-month housing market forecast in 2022 here. Also in October, through October 2023, their forecast called for a 4.1% increase in home prices, the second consecutive upward revision in their forecast here. But this November, entirely different though, because look at this. Corelogic is forecasting that home prices are only going to increase by 2.8% from November 2022 through November 2023. So this is a pretty significant downward revision because last month they were calling for home prices to increase by 4.1% over the next 12 months. Now it's only 2.8%. Also on a month-over-month basis, they're calling for home prices to actually decrease by 0.1% from November to December of 2022. Also, according to Corelogic here, year-over-year home price growth ended its 21 consecutive month of double-digit increases in their HPI in November, because in November, their HPI only increased by 8.6% compared to November 2021. And that was the lowest rate of appreciation in exactly 2 years. So in other words, home prices nationwide were increasing by double digits for 21 consecutive months. But this November, they only increased by 8.6%. So of course, as you guys all know, if you guys follow the channel, home prices nationwide have decreased about 10% since June of this year, based on data from Redfin, based on the median sold price. So of course, the one reason why we're seeing this decrease in home prices is due to a lack of housing affordability because rates have been increasing so much. So I tend to talk about changes for average monthly housing payments compared to 1 year ago. But in today's video, I want to share how average monthly housing payments compare right now versus 3 years ago. So obviously going back to pre-COVID era here, looking at home prices and also mortgage rates over the past 3 years. And I actually found something to be very interesting because this lack of housing affordability that I've been talking about on the channel for over a year now is really pronounced when actually looking at the data though. So look at this. 3 years ago, I'll just call it the end of December in 2019, obviously before we even heard about COVID, average rates were about 3.80%. So average rates are about 3.8%. And right now, at the time of this video, which is the 5th of January, rates are averaging at 6.50%. Also look at home prices, because back in the end of December of 2019, according to Redfin here, the median sold price was only $270,000. But at the end of 2022, it increased to $352,000. $270,000 up to $352,000. So look at the average monthly housing payments compared to 3 years ago compared to now. So here's your average monthly housing payment based on principal and interest only. When I make these when I make these comparisons, I tend to look at only principal and interest because taxes and insurance tends to vary quite a bit depending on where you live, right? So in this comparison, I'm only going to be looking at the differences in P&I, or principal and interest payments here. So 1 year ago, or actually 3 years ago, the end of December of 2019, again, the median sold price in the US was $270,000, and the average interest rate for a 30-year fix for people with exceptional credit, of course, was 3.8%. That would give you a P&I payment of $1,006 per month. And by the way, your interest paid over the life of the loan of 30 years would only be $146,000. I mentioned that because look at this right now, because look at this. The median sold price today, or actually the end of December 2022, is $352,000. Again, average interest rate at 6.5%. That would give you a new P&I payment of $1,780 per month. And look at this. The interest paid is $359,165. So $359,000 is an interest paid over the life of the loan of 30 years. And that's because the interest rate's so high, 6.5%. When looking at rates at 3.8% and of course a lower loan balance as well, look at that. Your interest paid is only $146,000. I'm only mentioning that because I tend to talk about the differences in your average monthly housing payment, but the interest paid over the life of the loan is quite a bit when we're talking about an increase in home prices and also an increase of interest rates. So going back here, again, 3 years ago, your housing payment would be $1,006 per month. And fast forward today, approximately $1,780 per month. And therefore, by my dumb math, that's an increase of $774 per month to buy a median price home today versus 3 years ago, or a whopping 77% increase in your average monthly housing payment. And this whopping 77% increase in your average monthly housing payment to buy a median price home today versus 3 years ago is due to two main factors. Number one, mortgage rates increasing from 3.8% to 6.5% today. And number two, home prices during the last 3 years have increased a whopping 30%, going back to December of 2019. Therefore, because mortgage rates went from 3.8% to 6.5%, and on top of that, home prices increased by 30%, this is why we have a lack of housing affordability in the US, which is causing home prices to decrease nationwide. Therefore, it's no big surprise here that Corelogic is predicting that home prices are going to get negative on a year-over-year basis in the second quarter of this year. In other words, for home prices to decrease on a year-over-year basis by the second quarter of 2023. And according to Corelogic, 2023 will present its own challenges as consumers remain very wary of our housing market and the overall economic outlook. While the recent decline in mortgage rates may bode well for the housing market, and regarding a decrease in mortgage rates, have a look at this because rates have been decreasing compared to late October of last year, because in late October, rates were averaging about 7.37%. And now again, as of today, which is the 5th of January, rates are averaging about 6.5%. So rates have been decreasing ever since more or less the end of October here. However, when comparing rates today versus 12 months ago, rates have increased about 3.13 percentage points because 1 year ago, rates were averaging about 3.37%. In any case, going back to Corelogic's report here, it says this recent decline in mortgage rates may bode well for the housing market. Potential home buyers are grappling with the idea of buying amid possible further price declines. So we're saying right here is that a lot of people believe that home prices are going to decrease further. Therefore, they're waiting out this housing market decline to see what happens here. So home buyers are grappling with home prices potentially falling further and a continued inventory shortage. I actually want to touch on this because when looking at inventory over the past 3 years or past 2 years, we're actually at higher levels right now versus 2 years ago. But when looking at pre-COVID levels, we're actually at below levels. So have a look at this. This is on Uncle Fred's website. You guys all know it's a great day when looking at graphs on Uncle Fred's website. This is Fred's graph here, and the source here is Realtor.com. They haven't posted December's data just yet, but for the end of November, there was a total of 751,000 houses for sale in the US, approximately 751,000. This is above levels back in 2021. There was about 512,000. Also at 751,000 last November, this is higher than November of 2020 when there was 683,000. Look at this though, because look at November of 2019, there's approximately 1.1 million houses for sale. And also in 2018, there was just under 1.3 million. Therefore, inventory levels back in November 2018 is nearly twice as high as we have in November 2022. So when talking about an inventory shortage, that really only applies to pre-COVID era because we have far fewer houses listed for sale right now compared to pre-COVID. Nevertheless, according to Corelogic here, with a slowing, improving affordability, I believe they mean this because home prices have been decreasing and also rates have been decreasing ever since October. It's questionable though when looking at affordability compared to 3 years ago though, right? Based on my example. With slowing, improving affordability, and a more optimistic economic outlook than previously believed. I'm kind of scratching my head regarding that, but anyways, the housing market could show resilience in 2023. And please leave me a comment below with your thoughts regarding their last statement right here. Corelogic also provides some insights regarding home prices at a national level here, or statewide level in the US here. It says home prices increased by 8.6% on a year-over-year basis this November, or last November compared to November 2021. But no states posted an annual decline in home prices on a year-over-year basis. The states with the highest increases on a year-over-year basis were these following states. And by the way, these are home price increases from November 2021 through November 2022. Florida led the nation with an 18% increase, and that was followed by South Carolina with a 13.9% increase. Then Georgia, North Carolina, Tennessee, Arkansas, Indiana, Vermont, Maine, and New Hampshire all posting double-digit increases in home prices over the last 12 months. In contrast, some of the states actually posted a less than 5% increase in home prices compared to 1 year ago, were Washington, Oregon, Idaho, California, as well as New York. Corelogic also looked at the top 10 cities in which home prices have changed compared to 12 months ago. And Miami led the pack with a 21.3% increase in home prices compared to November 2021. That was actually followed by Houston, a 10.6% increase. And look at this, Phoenix, Arizona only increasing by 8.1%. If I recall, back in the spring months this year and the summer months, this number was well into the double digits. I believe it was around 20% if I'm not mistaken, but only an 8.1% increase right now. San Diego increasing by 6.8%, Los Angeles only 4.6%, on par with Washington, D.C. Las Vegas increasing by 7.7%, Denver, Colorado increasing by 6.3%. And that was very close to Chicago increasing by 6.7%, and Boston increasing by 5.8%. In contrast though, here are the top 5 markets in which Corelogic is predicting that home prices may decline over the next 12 months. And actually, every single one of these cities here, according to Corelogic here, has a very high probability of home prices decreasing over the next 12 months. So leading the nation was actually in Bellingham, Washington. Again, a very high probability that home prices are going to decrease over the next 12 months. That was actually followed by Crestview, Fort Walton Beach, Destin, Florida, and then Salem, Oregon, and then Merced, California, as well as urban Honolulu, Hawaii. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. And of course, I appreciate you. Hope you guys have an awesome day and look forward to seeing you on the next video.